In trading, consistency is more powerful than intensity. One great trade won't make you rich, but consistent discipline surely will. Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. In this video, I'll walk you through my trade plan for Tuesday's market, which happens to be the first ever Nifty weekly expiry on a Tuesday after 25 years since Nifty expiry has been there. I'll discuss the key levels, setups, and the possible scenarios. If you find this the content adding value to your trading, make sure to like the video, subscribe to the channel if you haven't already, and share your thoughts in the comments. Let's dive right in. And as usual, the video will be divided into two parts. First part will be about what we had planned for today versus what happened, how did we play that out, and in the second part, we'll plan the trade setup for tomorrow. Right. So our plan was to create a long entry above this zone with a pullback. We were again, there were multiple entries and multiple scenarios. Either we would have taken resistance and we could have created a short entry, but then markets opened with a slight gap up, immediately went up, gave us a closing above this zone, gave us some follow-ups as well. And then uh, this was the place where I actually entered into the trades after this brief two red candles. So this 9:45 candle was the place where I entered into the first long trade. Now, I was into two minds because the pullback was not deep enough, but then I entered because of this hammer position, which showed that okay, there is buying which is emerging. And this earlier, the first red candle was kind of a indecisive candle, almost like a doji. And that was the reason with this candle, I had put an entry trigger above the doji's high, which entered again. The candle closed near the day's low, but then again, my stop loss was below this particular swing. So I held on to the trade. Markets went up, came down, took my SL. So the first trade of the day was a stop loss trade for me. Right around here, this is the place where I had exited the trade. I had placed the SL below this particular swing, and markets even took my SL eventually. Post this, I decided to not be too aggressive as I have been planning and thinking that markets will can be a little volatile because markets have given us a good fall. We are again near a support area as well. So this entire big zone, green zone is the gap border area. So the bias was again on the long side. Reason, market structure. We are above the point 0.5 to 0.618 pip zone. We had again taken a good support from here, creating a double bottom. But then again, I had decided to let the market settle in and then only decide for a trade. Now, after this breakout had come in, so I drawn this particular trend line as well. This kind of looks like a inverted head and shoulder pattern. And that was the reason I drew this particular trend line, waited for markets to give me a closing above it. Now, this is where it gets very interesting, right? Around here, if you observe the price action, it is a lot of doji candles with wicks on either side, right? Now, whenever there is a series of indecisive candles in the market, it means only one thing, that the market is confused around here, whether the market is going to go up from here or the market is going to go down from here. There's a lot of activity happening in the smaller consolidation zone where both buyers and sellers are present. Market is going up, not able to sustain, coming down, market is going down, not able to sustain, again coming up. Ultimately, you can see here one, two, three, four, five, almost five dojis. So any break above this was a long call for me. My plan was to take a long trade if market goes above this. And if market breaks down below this zone and again enters into this area, this will be a fake breakout of this particular zone as well. So this will be the breakout which failed, and failed breakouts. I would have taken a trade on the short side. Markets eventually broke out from it. I placed the SL right. The original SL was right below this particular swing. Now, once market made this particular swing, I had placed my SL around here. Now, the only reason to hold this trade for a longer period of time was the inverted head and shoulder formation around here, with which the targets are, again, as you know, the height or the distance from the head till the neckline is what is the projected target on the upside. So I was anticipating good move here, and we did get a good move on the spot chart. But if we look at the options chart, the move was not so great because of the falling VIX. The India VIX was on a constant decline throughout the day today. Uh, that is in some way positive because a rising market with a falling VIX is considered positive. That okay, there is no fear while the market is rising, and then that means it can be a good move on the upside, but nonetheless, it comes with a fair share of disadvantage to option buyers. Of course, people who are going long using option selling by shorting puts, they would be making very good money out here. But then, as option buyers, but nonetheless, it was a good trade. A bit difficult on the spot chart to understand, but on the option premium, the premium was very forming very good swings, and then you could have easily trailed. I held on to the trade till around 3 p.m. It was post 3 p.m. when I decided to square off the trade because I do not carry any positions overnight. And that is the max time for me or max limit for me in case if I am in a trade. And I exited the trade around 3132 around in this red candle somewhere around here. So these were the two trades that I took. First one was an SL trade. No matter what happens, once you have a plan in place and things are happening according to that, you take that entry. I a bit skeptical, like I said, mentioned earlier. I was a bit skeptical around here if deciding on whether to enter or not because the pullback was not deep enough. But then again, since we had shown some good recovery and we were up much above the uh, important fib level, which we had broken out of into early in the morning as well. So that was the reason I decided nonetheless to go for it. Again, the major reason was the SL was very small, right? My entry was around here, the SL was around here. If you see, this is 524 levels, entry was 546. So mostly the 20 odd points on spot chart. So that was the reason I decided to go with it. Nonetheless, again, even if everything is right, all your analysis is right, uh, markets will sometime go and take your SL. That is a part of the game. That is something that you need to be okay with, right? The point I am emphasizing so much about is even after planning everything, even after doing everything according to the plan, even after waiting for all the confirmations, things can still go wrong for you in a trade. And that is where you need to be okay with it. That, okay, this is a part of the trading world and this is bound to happen. So there's no way you can completely steer out of it. For tomorrow, we don't need this. So I hope the trade plan was clear. I'm not deleting this line because this is an important low that we had marked based on these lows, based on daily charts. So if we look at Nifty on a daily chart, now there is something which I had not drawn while I was doing this analysis for today's market. The reason was I was quite focused on the move towards the downside, right? My bias was on the downside based on all the price action. But we need to mark an important level. So this was the weekly fib resistance, and on a daily time frame, right? So this is the daily fib resistance based on. So this is the swing. This is the swing that we have created around here, and that is the reason why I have. Okay, for the reason for not doing this particular level for today's analysis was again we're not sure if the swing is there or if we are for going further down, right? So this is the reason why we'll be having this level on the charts for tomorrow. Now we'll keep the plan of action very, very simple. Again, I another point which I forgot to discuss on the daily chart, we have formed a candle which is a very good bullish candle. The opening is equals to low. The high of this candle is higher than previous high. The low is higher than previous low, previous day's low, as well as the closing is above the previous high, which kind of is like a bullish reversal candle or also a kind of trading stop loss that I use. So in case if I would have been a positional trader, I'm not trading on a 5 minutes chart, but I'm trading on a daily time frame chart. This would have been my exit candle around here, and I would be waiting on the sidelines to try to form another. There are multiple scenarios which can happen around here. Since this low is not breached before we have taken this turn, Either this is just a pullback, we are coming back around these levels and then we are going to go down, or else we will be again to go long positionally. We This is not the candle, right candle. We need another pullback. We need a double bottom formation around here. That is when we can change our bias towards the positive side. But again, that is something that we don't do. We don't predict anything. We'll wait for the markets to form. And right now, there's only one word of advice that I can give everybody here is focus only on intraday trading. Markets are behaving in a very odd way, and just try to focus on the daily setups. Scalp your way out. Do not hold your trades for very, very long. Scalp your way out, and I guess you will be doing good. Number one trade setup for tomorrow. First scenario, we break out with a pullback. Again, we are going long. Around these levels, based on price action, we can take a short entry. Not necessarily for tomorrow, but again, we are obviously we are above the daily fib level. So above this, our bias will automatically change towards the long side. How do we again react around these levels is something that we'll observe once the price reaches there. But then this is what it is. Again, tomorrow I will be on the lookout for the trap setup, which is at the opening. If we form a bullish candle which closes above today's high, and then the low of that candle gets taken out, we will be planning a short trade around here. But for taking any other short trades, again, we'll use fib in the live markets, right? So no new low has been, in case if this high does not breach, then from yesterday's this low till this low, I'll just quickly tell you what is to be done in the markets tomorrow. So this is the fib level for tomorrow. So any shorts that you need to take should be below this level only, which is 24,500. You can take, for example, 24,500 is a round figure. And below that, we can create a short entry, otherwise not. But in case if the market creates a new high tomorrow, say, for example, markets reaches these levels. So in that case, these particular levels will be changing. So based on that, we can take a short entry based on where the fib level is. Apart from that, I will be waiting for markets to maybe take a resistance from here to create a short entry, or if this rare setup does happen, we'll be taking a short entry around here as well. But then again, tomorrow is the first weekly expiry of Nifty on a Tuesday. So, guys, be careful. In case if you are trading Nifty, you are into options buying like me, shift to next week's options. Right. Again, today also, the two trades that I took were not in the 2nd September expiry. I had traded them in the 9th of September expiry. Right. So, that is what exactly I do on expiry as well as expiry -1. I shift to the next week expiry. And in case of a option, in case of the expiry special trade setup, which is based on the OI, if we are seeing signs of short covering or long unwinding based on the change in open interest, that is something which I will take only post 2 p.m. if there are evident signs, and that too based on the change in OI, and that is the only trade that I will be taking in the current week's expiry, right? So that's it for today's trade plan. Stay disciplined, trade smart, and let the setups come to you. If you haven't already, don't forget to like this video, subscribe to Your Nifty Guy, share it with your trading circle, and leave a comment with your thoughts. I'll see you in the next one. Cheers.